periods go, and used either February 15th of 19 to June 30 of 19, or from January 1st through February 29th of 2020. And since this is a test where you're evaluating whether or not you had a reduction in full-time equivalents, you want the lowest number here, because it will provide, if you do have a drop, it will provide for a lower drop. Also, there's one exception: if you have seasonal employers, you can use any 12-week period from May 1st to September 15th of 2019. As far as eligible costs go, just 2 notes overall. It's possible to have the total costs in excess of the loan application. And this is important because if you expect to have forgiveness, say your FTEs went down or you have a reduction due to one of the other tests, you can use more costs. You can kind of pad it, so to speak. So the example I have here is if you have a $100,000 PPP loan and you expect a reduction in costs, you can add other costs other than payroll. So if you make your costs over 115,000, you still get full forgiveness of 100,000. The second thing that you should keep in the back of your mind is that you can't use expenses for the PPP and also use them for a different credit. So the example I have here is an employee retention credit. Is in effect for 2021, but which may end up in some people's covered period. The example I have is if you have a PPP loan of 100,000 and 125,000 of wages, you only want to use $100,000 in wages towards the PPP, and that leaves you $25,000 towards the employee retention credit or whatever other use you want to use it for. Payroll costs include gross wages. Now, if you use the maximum covered period, the $46,154 is based on the maximum $100,000 per employee limit. Also includes employer contributions for employee health insurance, retirement, and state taxes. It does not include anything that you withheld from an employee. And amounts paid to owners or partners up to $20,833, which is the same as the old rule. If you have a cost that's incurred, a payroll cost, during the covered period, but is not paid for within the covered period, you can still include it as long as you pay it by the next payroll date. So usually if you have, say, ADP, they're going to take that out. But if you don't necessarily have that, as long as your wages are paid, where that state tax is paid, you'll be fine. The payroll is probably the most interesting part of the new law. These 3 that we're looking at now are the same as last year. Interest and your utilities have to be incurred, and they have to be based on a contract that was in effect prior to February 15th. There are 4 new categories. The first is operational expenditures, and unfortunately they don't really define these categories in a very detailed fashion in the instructions. So hopefully we will get some more guidance for that in the future. But the operational expenditures include delivery, payroll, like payroll fees, human resource costs, sales costs, property damage costs, which is vandalism or looting, and then supplier costs on the bottom, I think will be the best one. This is essential to the operations of the business, which I think would be a significant amount of the costs for a business. The issue here is that right now, the way the rule works is that the contract for those goods had to be in effect prior to the covered period, or in effect during the covered period if perishable. So we don't know exactly what that means, what would be perishable or what would not be. So there's some ambiguity there, but it's good to know that category is available. And finally, you have worker protection expenditures. This is also nice because it includes any capital expenditures. So if you had to build partitions or anything along those lines, that would be included. And we have the same kind of safe harbor on the bottom. Non-payroll costs have to be paid or incurred within the covered period, but as long as they're paid by the next billing date, they can be included. A couple of ineligible costs. Payments for prior debts, any refinancing is not includable. For your portion of federal payroll taxes, that's your FICA, your Medicare, and your FUTA, is not includable. Any otherwise includable costs that are outside of the period, interest on credit cards and things like that. Finally, mortgage interest and rent, we did say that they're included. For related parties, that amount is limited. So if you own the building that you also operate your business in, that would be a concern. The first reduction out of the three, as far as the full forgiveness, and just to I guess take a step back, you start out with full forgiveness, 100% forgiveness, and then each of these three tests are applied. The first is the salary wage test, then is the FTE test, and then there's the test for 60% of payroll. And once you're done with those tests, whatever is left is what gets forgiven. Salary wage test is the least impactful test. It only reduces total payroll costs. It does not affect non-payroll costs. So if the salary or hourly wage of any employee is reduced by more than 25% compared to the most recent full quarter before the covered period, you'll have a reduction in forgiveness, and I'll get into the math of that later. So for most people, that's the first quarter of 2020. For some people, that'll be the second quarter of 2020. Employees over 100,000 are not included, and if you can disregard this test, really, if you don't have any reductions. So if everyone had the same salary, if everyone had the same hourly wage, you could ignore this test. There is a safe harbor. So as an employer, you're not subject to forgiveness reduction if the wages are reduced between February 15th and April 26th and restored on December 31st. So that's important, because if you did not reduce the salary during this period, the February 15th to April 26th, but you did reduce it during the covered period and restored it, you're not eligible because your wages didn't go down. This is just the basic math to give you an example of how this reduction is applied. So I'm using a 24-week period, and we have 3 employees. And across the top, I just have the basic computations that I used to get to the numbers that are in each column. Really, John Doe and Jane Smith are fine. They have the same amount. Frank Minetti, he was very generous. He took a pay cut. So he went from $20 to $11 to an hour. The 75% reduction says, let's look at the 75% number, which is $15 an hour. So we're short $4 an hour. You take that and you multiply that by the average amount of hours that were worked in the prior quarter, the most recent full quarter, to come up with the weekly shortfall, because we're basing this on activity as it was, not as it is. And then we come up with the forgiveness reduction, in this case at $2,880. Second test is the FTE, and this is a slightly more impactful test because it reduces all costs. So all of your non-payroll costs are reduced as well by a percentage that we'll get into. Now, an FTE is really, for the purposes of this program, the number of hours worked by an employee in 1 week, up to 40, divided by 40 hours and rounded to 1/10. So, and it can't be more than 1. So if you're working 30 hours in a 40-hour week, that's 0.8 FTEs. You have to do this for every employee and just add up all those FTEs to come up to get your average FTE. And to make your life a little easier is assume that every full-time employee is 1 and every other employee is 0.5. And I would run through the computation and just make sure that it's not going to cause a reduction. If it doesn't, then you don't have to go through all that other nonsense with figuring out everybody's FTE. But if it does come up with a reduction, you want to make sure that you want to go back and look at the detailed computation to see if you don't get a better result. So this test, as long as you did not reduce the number of employees or the average paid hours of your employees between January 1 and the end of the cover period. Just a note, for if you're considering, do I really have to go through all this math? Because it is a little bit involved. There are a few exceptions to the FTE test. This is a borrower test as a whole. So if you, as an employer, reduced FTE between February 15th and April 26th and restored it to the FTE of the pay period including February 15th, that's the first test. Or if you were unable to operate at pre-February 15th COVID levels, you can, you're not impacted by this test. But number one is really the same as, it's very similar to the salary wage. And the second one is nice for businesses that, as far as the calculation of that, I don't know if they're going to make it any more complicated than it needs to be. Right now on the form, it's pretty straightforward. The second safe harbor for the FTE, borrower is not subject for forgiveness for an employee if, say, the employee doesn't have as many hours as they previously did. If you made a written offer of employment to that employee and they rejected it, or if you fired them, or if they resigned or requested a reduction of hours, then you're not subject to this reduction if, only if. And the thinking is that you may have somebody who quits and you're not able to hire them until the end of the cover period. You don't take a loss with that. Just the basic idea of what the math looks like. Again, I used a 24-week period here, and I just assumed that the FTE for the reference period was 3.0. So I'm assuming essentially that these 3 employees here each worked full time. Now in this instance, again, Frank Minetti, I like to pick on myself, worked 600 hours out of the 960, and none of the exceptions were met. So the FTE in this case is 0.6, which brings us to a total FTE, or the average FTE, or whatever you want to call it, of 2.6. And that is 87% of the reference FTE. So in this case, total forgivable costs are reduced by 13%. So if you're talking about $100,000 in total costs, it's a $13,000 reduction. So that's something you want to make sure. Final test is the payroll cost test. In the original law, there was a provision that a certain percentage of payroll costs, a certain percentage of the total costs forgiven had to be made up of payroll costs, because really that's the whole purpose of the loan. So as of right now, that number is 60%. So it doesn't mean that non-payroll costs can be 40%. It means that you take your payroll costs before reduction and divide by 60%. So in this example that I have on the bottom, $100,000 loan with $45,000 in payroll costs, maximum forgiveness is only $75,000. is, this might be important because if you're considering an 8-week, if your loan was from back in the beginning of the program, and you're considering an 8-week for, excuse me, 8-week cover period, you may not have enough payroll costs in that period to get full forgiveness. There are 3 forms that are available right now to apply for forgiveness. The first one is the 3508S, which is the streamlined form, and this is only 1 page long. It's for loans of $150,000 or less, and it includes loans with reductions for any of the 3 tests. And it's really just general certifications that you've complied with the laws and things like that, and you have to disclose a few numbers, but it's very short and it's very simple. And in fact, there is no documentation that's required to be submitted with this forgiveness, this particular application. Now, if the loan is over 150, you would go to the 3508EZ if there are no FTE or salary wage forgiveness reductions. And this is a little bit more of an involved form. There are some calculations, there are some more detailed certifications and statements that you have to make, and forgiveness information that has to be provided. And for the easy, you have to provide typically your payroll cost information will have to be submitted with that application. Now, if you're over 150 and you do have any of these reductions, then you have to go with the full form, which is pretty involved. They're looking for detailed calculations, certifications, and forgiveness. So they want detailed computations of FTE per employee and detailed analysis of FTEs for maybe exceptions if you had to rehire an employee, things like that, or if you had to fire an employee and replace them. They're looking for that kind of documentation. And as I mentioned before, each bank is responsible for collecting information on the loans that it processes. So you have slightly different documentation requirements, substantially different. And again, every bank that I've seen so far has some sort of informational page that says, make sure you have this information before you apply. As far as record keeping goes, you have to keep everything for either 3 or 4 years. So the payroll costs, anything that has to do with the payroll costs would be 4 years. Tax filings, payroll reports for the covered period, any kind of report that maybe the payroll provider would give you as far as a PPP report, retirement contributions, health insurance contributions, all that proof and all the proof of payment, you would need to cover for 4 years. Now, the non-payroll costs you only have to keep for 3 years, but it's the same thing. You want to provide whatever proof that you think that you'll need to justify those numbers. And for things like rent, you would have to keep the lease to show that you had a lease in effect prior to February 15th. And finally, all of your original loan application information, your certifications when you had the loan eligibility, things like that, I would keep. And really, in this day and age where we can pretty much scan anything, I would say keep whatever you possibly can and just keep it for 4 years. So that's it for the first, not the first draw, but the forgiveness as far as the 2020 information goes. The second draw, what they're calling the second draw PPP, is what's coming out now. And there are 2 types of draws that are coming out now. There's the first draw, which is essentially people who have not applied for forgiveness in the past. And then the second draw is people or employers who have applied for PPP money in the past. Oops. is a list of the second draw eligible entities. The chambers, which we were glad to see, are now included. Any business with employees, any independent contractor with or without employees, includable, and that's the same as before. There is a list of people, ineligible, which is new. Some are new, some are old. Political or lobbying was never allowed. Illegal activities were not allowed. Members of the government were not allowed. They've added entities that are formed and operate or have resident shareholders in China. These that are now permanently closed are not eligible for the second draw. Each grower has to pass essentially this eligibility test. Right, industry, fewer than 300 employees. About you, but I'm pretty safe there. To receive the first loan and have used the loan on an allowable expense by the application date, or will use that money before the date the second draw is issued. Now, I don't think that that's a problem for most people. The one thing I would suggest, and there's nothing official on this, this is just a thought on how sometimes it's how you wrap it, how you present it to the government makes the difference. So if you have a separate PPP account, I would say you want to drain that. So whether you use the money or not, or whether you think you're going to have to pay the money back or not, if you're considering taking a second draw, you want that money out of the bank account. Now, I don't know that would prevent you from getting a second draw, but I think it would be better evidence should the SBA come back in a few years and ask for that. You want to be able to prove, yes, I had spent it on the expenses, and yes, I took it out of the bank account. Maybe I'm splitting hairs here, but I think it's worth it if that's a concern. And finally, the most important criteria is the reduction of gross receipts. So a business must have, or entity must have, experienced a reduction in gross receipts of 25% or more in 2020 relative to 2019. There is not, to date, an ironclad definition of gross receipts, although I would think that there's not a lot of question about that. Apparently there is. The test can be applied from quarter to quarter or for the year in full. So if you do a quarter by quarter test, it would be, say, the first quarter of 2020 versus this first quarter of 2019, or the second quarter of 2020 versus the second quarter of 2019. If you wanted to use the annual reduction, then you would have to provide a tax return. So at this point, you might have a hard time with that, since the tax returns have not been really prepared for most businesses, almost all businesses, I would think, especially not that are considering these type of loans. Okay, so I'm a little ahead of myself. And just at the bottom, again, the banks might have a slightly different requirement for these applications, but very helpful with the information screens. I do have two other things about second draw PPP that didn't make it to the slides. The first is that to meet this 25% reduction, you can wait if the loan is $150,000 or less, the second draw loan. You don't have to provide the proof of the reduction until you ask for forgiveness down the road. Whereas if the loan is over 150,000, then you do have to provide proof. Now, some banks are asking for that, and really you should do the test before to make sure, but you don't have to submit that proof if you have a smaller loan. Another thing is that for the second draw, or well, actually for the first draw and the second draw of the loan, the loans that are being issued now to people that are businesses that are applying for now, you can use the higher of your 2019 wages to compute the loan, or your 2020 wages to compute the loan. So the old loan basis was 2.5 times average monthly payroll times 2019 wages. So now you can pick whichever is higher. And finally, some good news for restaurants and other businesses in hospitality with the NAICS code of 70 that starts with 72. The computation is a little bit more generous. It's 3.5 times of average monthly salary rather than the 2.5 months of average monthly salary. So they'll be getting, it's not an enormous boost, but it is a little bit of a benefit. So I have my contact information here. If anybody has any questions, and I know we have time, we can look at those. So if there's any follow-up, please give me a call, shoot me an email. That's fine as well.
Thank you so much, Frank. We do have some questions, and if you have additional questions, please feel free to put them in the chat, and I will facilitate that for you. Also, I'll be sending out the recording of this as well as the slides, if that's okay, Frank.
Sure.
Okay. So the first question is, if the individual who took the pay cut gets a bonus at the end of the year near or equivalent to the pay cut, does this now equal out the test?
Say that one more time.
If the individual who took the pay cut gets a bonus at the end of the year near or equivalent to the pay cut, does this now equal out the test?
I am not 100% sure, but I would think probably not. The I believe that it's just a reported salary, so you might be okay, but I'm not sure I don't believe I've seen any guidance to that effect.
To bonuses.
Yeah, you're probably okay, but there may be there's a chance that you're not.
I guess the question is it more about the hours worked or the money earned?
Yes. Unfortunately, that's
okay.
The hours worked is for the FTE test. The money earned is really for the salary test. So if someone gets the same as someone is on salary and they take a reduction and then their salary is restored, you're okay. If that person takes a reduction and maybe they take a bonus by the end of the covered period, I would say that you're okay. That's conjecture on my point. And as far as the hourly rate, I think that you're looking at the same thing. If somebody was making, took a pay cut to $15 an hour that was ordinarily making 20, if they get a bonus at the end of, or if they at the end of the covered period, then you'll probably be all right. But I definitely would not wait until after the covered period. You would, if you're thinking about doing something like that, I would say you would want to do it within the covered period. So for the second draw, for the ones that are out now, you have a little bit more leeway, whereas before you did not. We're done with that covered period.
Okay, and then another question is, my loan is a 2-1 start and it'll run out on May 31st. However, during this time, one of my employees will go out on maternity leave. She will miss the month of May within the PPP use time of 2-1 through 5/31. How does this affect my forgiveness, or will it?
We're talking about 2-1 of this year?
Yes.
I'm just reading it from the chat box.
Yeah, so Frank, that was my question. Basically, the last month of the loan, right before it all runs out, she'll be out on maternity leave. So does that affect my forgiveness, or how does it affect my forgiveness, if at all, if at all?
If you replace her, you should be fine.
Okay.
Now, unfortunately, the dates for the new for this new loan are not available. So under the last
No, this is the
loan.
second draw.
Right, well, that's the problem, is that under the first loan, you had until, if you replaced her by December 31st of 2020, then you were fine. But we don't have that date for this year. So I don't know if it's, I mean, probably if you replace her, you'll be fine. But as of what the measurement date is, I don't know. So it could be, if you replace her by December 31st of 2021, you're fine.
Well, no, she's coming back, but she's going out May 1. We're going to replace her with a part-timer temporarily
Okay,
until she comes back. And then, but that won't be, I think we agreed upon a September 1 return. So there's just there's this kind of like space there. And I'm afraid that some of that salary that was earmarked for her and I would get forgiveness for, I'm afraid I won't get that forgiveness now for that bit of money. That's my concern.
I don't know of an exception for maternity, but I can look that up. If you just email me that,
Yeah.
then I can get you an answer on that.
Thanks, Frank. I appreciate that.
Sure.
Thank you, Frank. Also, if you received the EIDL $10,000 early on and it was to be converted into a loan and has now been forgiven based upon the December 2020 Law Act, what's the question here, Phil?
Has it now been forgiven?
Oh, has it now? I'm like, sorry.
The EIDL grant money that you got when you originally applied for the EIDL loan, which was $1,000 an employee up to 10, that's a grant. So you don't have to pay that back in any case. They also have modified the PPP forgiveness calculation so that you're not penalized for that idle grant, which is different in the past. And I think they changed the law in June or July. They reduced your PPP forgiveness by the amount of the idle loan that you got, but that's not the case anymore. So if you have a $10,000 idle grant and a $50,000 PPP grant, then you'll get the full PPP forgiveness of 50, plus you get to keep the 10 of the idle.
If you're currently paying that back with interest, you can go back to the bank and say, give me my money back.
Well, there are two portions of the idle loan. There was the grant portion of the 10,000, and then there was the loan, which was significantly, usually like 100,000 or 150,000.
Yeah, not that. Yeah, no, this is different. This was just a grant. Yeah. My last question was, if you are a nonprofit and you're looking to do the second draw and you have income from, let's say, endowments or from savings that you draw to help you balance your budget and operate, but it's not income from, say, members or attendees at events and different things, and you have to figure out a 25% loss. Can you take that out of your numbers?
I don't have the answer to that because they haven't given us an answer to that. What I've heard is that you use your normal method of accounting. So if you reported that grant as income or that endowment as income when it was received, then it would be counted as income at that point and not when you draw it down. But if it's some sort of restricted money where you pull it out or year over year and you only report it as income in the year that you take it out, then it would be reported as income when you take it out. But there's nothing on that.
Thanks.
Does anyone have any other questions that they want to just, if you raise your hand, I can just call on you instead of typing it. Ralph.
Oh, thank you, Danielle. I don't have a question, but I do have a couple of words of encouragement. I applied for my company's forgiveness. It was relatively easy to do. The one-page form was very quick to fill out. And it goes to the bank or the lender who gave you the funds. It took about 2 days and I got a message back and said, we are sending this up to the SBA with the recommendation of full forgiveness. We kept very detailed records, and so to send them off to them, it was just a matter of a few minutes getting it done. So while this sounds really like a difficult task, the reality of it is that it actually wasn't that bad. And I did that early just so I could report that to everyone here.
Excellent. Thank you, Ralph. Thank you.
And I had,
Some
I had the
some
same,
banks are not ready for forgiveness at this point. Just so you're aware, and it really just has to do with the fact that they have to update their systems for the new forms, which really just came out a couple of weeks ago. So if you do see, if you do go to apply for forgiveness, you might find that the bank's not ready, and that's normal.
I know I can add that I've, like Ralph, found it very easy to get forgiveness because I was under that 150 threshold. And to Phil's point, I had the grant too, and I applied for that PPP forgiveness a little too early, so that grant money is hanging out there. But I will say that they're not asking me to repay it yet because it's in limbo. They don't know if they're going to forgive it or not. So Phil, I would hang in there. My bank at least told me to sit tight, but it's still showing as money that I'm going to owe the bank. But hopefully it gets wiped away.
Is there any other questions for Frank? Okay. Thank you guys so much. And Frank, thank you for your expertise always and for, being a great friend to the chamber. Please join us the second Thursday of every month for Strategies for Success. Next month, we are taking on the topic of cyber security with John LeMay from Ocean Tech. And then the month after that, we are going to do a Grow with Google seminar. This is a free event for all of our members and for actually future members as well. So please feel free to join us. Tomorrow we have Member Connect at 7:45 in the morning, 7:30 in the morning. Also virtually, we are going to be virtual for the month of January and February and March. Thank you guys for coming today. And if you have any additional questions, please let me know. And Frank, I'll be sending out your slides as well as the recording to everybody. Thank you again.
Thank you very much. That was great.
Thank you.
Thank you.
Thanks, Frank.